Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil markets. I'll start with Paris rapeseed. Okay, as I said 3 weeks ago here, there are two things to note. I've mentioned this before, but if we set aside the island bottom in June, then we have an ascending triangle formed over March to mid-August, of which we've seen a breakout over the upper trend line, currently at 569.25 6 weeks ago. This has a provisional target X in the 617.5 area, which was a big ask at the time, but which came true this week. The second pattern is to look at the action since April this time, exclusive again of the island bottom as a possible bull channel. This pattern has a provisional target X1 in the 614.75 area, which also came true this week. That's what I'd left you with the last two times. Since then, specifically last week, prices have broken higher. This break higher has given me a chance to tidy up some of the now surplus projected Fibonacci levels, such that we are left with only one set. We are currently in between the 50% projected Fibonacci line below at 600 even, and the 100% projected Fibonacci line above at 643.75. Now this tidy up also revealed another separate rising wedge pattern. This one originated from the June high and low, with the upper trend line currently at 587.5, the highest trend line on the daily chart, and the lower trend line being the uptrend. Interestingly, it started at the island bottom. The upper trend line is a definite two-pointer, at the very least, and with some finessing a three-pointer. Now the lower trend line, currently at 577 even, is a definite four-pointer. So you can see from this pedigree that this looks like a good pattern. Now in this pattern the market broke higher Tuesday last week. Thus we have potential for a topside target for this pattern. An initial target would be in the 656 area. This is another huge ask, but not as much as you'd think of the market, but that is what I can see in the top right hand corner of my daily chart. Now there are three caveats to this. Firstly, this target is beyond any projected Fibonacci level that I can draw at this time, and that always makes me nervous, but it is not beyond them by much. Secondly, rising wedge breaks, especially rising wedge patterns that break upwards, tend to lose their effectiveness sometime like 2 weeks after the break. So here we're talking early to middle next week. Finally, I have no other pattern supporting this singular if competent pattern, bullish pattern. If all this being said, target X2 in the 656 even area is what I can see at this time. Winnipeg canola. As I had previously mentioned many times now, the old descending expanding wedge pattern formed over June to July had run straight into another pattern or patterns, rather than try for its own target below. To complicate this things further, there are now two patterns, both having run to fruition, and both seemingly not as yet showing a sign of which would be the more dominant. We have a descending triangle from early July and a sideways triangle also from July. The upper trend line for both is the same, the May to date downtrend currently at 875 even, of which the market is now sitting on top of, possibly uncomfortably. Now for the descending triangle we have a base on the congestion between 819 to 819.40. I have to add something here now. Since I first started to look at this idea, I've been underwhelmed by it. I'm not happy about this pattern. I would rather call it, or rather look at a smaller descending triangle from mid-August with the same downtrend for ease of use and on a base of the 840 area. Anyway, the second pattern, the sideways triangle, has, or should I say had, an uptrend breached 2 weeks ago, currently at 877.60. However, this breach has not really been that effective, as prices have continued more or less sideways, though they have managed most recently to coagulate below and now above the rising short medium moving average, currently 872.5. Okay, so last time I gave some levels on the downside for this pattern, initial target on the downside would be in the 802.25 area, and a secondary, well, 802.20 area, and a secondary target X1 would be in the 720 area. I said last week, and I quote, "I can fully understand if target X1 would be a bit too much of a stretch. However, the sideways to bullish action seen last week and this, it is opportune to lay out some targets on the top side as well." Now for the new smaller descending triangle, we have an initial potential topside target in the 930.80 area and a secondary target in the 946.5 area. For the ragged sideways triangle, we have an initial potential target X4 in the 968 area and a secondary target at the high of the market in the 1008 area. To be honest, I'm not in love with any of the three patterns I've indicated, but of the three right now, the smaller descending triangle with an upside target in the 930 area seems to be the most likely. Additionally, it is worth remembering that secondary targets, ones I've listed, are extremely hard to fulfill anywhere. Just to keep that in mind. Bursa Malaysia crude palm oil. First off, please continue to try and ignore the color changes in the labels on the daily chart. There is no special significance to them, it is just my charting system playing silly buggers again. Anyway, I said recently that we hadn't done much here since the break out of the bull channel in late July, mainly moving in between 4300 and 4650. Well, that's no longer strictly accurate, as 2 weeks ago we had a gapping lower move down through the short medium moving average, currently at 44.32, the medium moving average currently 42.28, and finally stopping short of testing down to the congestion supports between 40.10 and 39.53. Emerging from within, we have actually coming out from that the rising long moving average, currently at 40.33. This halt and reversal back up with a gap set the stage for the start of another move, a move I had intimated weeks beforehand. You see, the move up from the low to the high, and especially the high close last week, gave us a weekly key reversal up. Additionally, the follow-on higher this week, especially the gapping move up today, has given a rare monthly key reversal up here as well. So why are these so anticipated and important in my eyes, other than on their own as a standout patterns? Well, it's because a little while ago I laid out a scenario for a potentially very, very large bullish pattern. It is to look at the whole of the May to date action, including the last few sideways weeks, especially at the last few sideways weeks, especially there, as an extended V bottom. Now this pattern is not that common, but it does seem to have some heavy merit at this time. And by heavy, I mean some really heavy merit. Yet this proposed pattern leaves a question open and a possibility as well. The question is this: the action since the break out of the bull channel is still somewhat amorphous, despite the weekly and monthly key reversals up. The action still lacks a distinct shape or specific form. Hence it is hard to, at this time, to give an idea of direction or really of size, exclusive of what happened today and the weekly and the monthly key reversals up. The only other thing to really do is to look at the action since the low of July up to the high of August as the size of the potential move and something that may happen. Thus, it could be quite large. It could also still be a simple bull flag stroke bullish halfway hesitation. However, if it is the larger extended V pattern, then it will have the backing of not just the June action, but all the actions since May. That is quite a lot. Quite a lot. What we all now need to look out for here is to see what develops in the next few days with these two key reversals up now, the weekly and the monthly. Now, separate to this, two final things I will add. Firstly, the bullish Andrews pitchfork for the 2021 action, and especially the middle tine, currently at 48.05, still seems to be the main bullish incentive here. My drawing of this bullish Andrews pitchfork so many weeks ago had been a bit speculative on my part, but it still maintains its validity and prominent bullishness. Secondly, and finally, I had previously spoken at length about the bow tie formation made up from three of the moving averages. Short moving average, currently 44.86, the short medium moving average, currently 44.32, and the medium moving average, currently 42.28. They were, as I've previously mentioned, in the wrong order, for either a bullish or a bearish bow tie. But we nevertheless did have a crossover. In this case, the crossover happened on the 23rd of July. Therefore, between the 13th and the 19th of August, we should have seen the result of this crossover. However, we hadn't seen anything. Thus, I would ask you to treat the following pattern or action in the spirit of which I show it, but also with a pinch of salt. We had a golden cross, a good looking one, of the short medium moving average over the medium moving average 4 weeks ago. This is perhaps a small but significant feature that may make a difference going forward. However, please note golden and dead crosses are lagging indicators, so please continue to treat them carefully. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.